Hey, what's going on YouTube, and welcome back to Tech Conversations. I am your host Guillermo. It is June 8th. Hope you're all having a great day today. As you can see, it is a red day for me, down $230 today, or about 0.2%. I was down over $3,000 earlier this morning, but we've been able to recover very nicely. I was starting to feel like February, March when a lot of stocks dropped 60-70%. But this time we came more prepared, and that's what I want to talk about today. How I saved myself from losing thousands of dollars this week by selling call options in the money. So before I get into that, all I ask is that you guys hit the like button down below and subscribe, guys. It really helps out the channel. This is a very important video because, again, it's important to talk about how to make gains, how to make money. But it's just as important to talk about how to limit your losses, how to protect your profits. And that's what I want to focus on here today. So again, let's talk about how I saved myself from losing thousands of dollars this week by selling call options in the money. So let's go over to NEO stock here first of all. So I have 200 shares of NEO and I'm selling calls on NEO, and I'll show you guys the real life example towards the end of the video. But let's pretend I don't have any shares of NEO right now. Now, hopefully by now you guys understand how selling call options works, more specifically covered calls. That means that for every call you want to sell, you need to own at least 100 shares of a stock. So if I wanted to sell a call on NEO, I have to have 100 shares for each call that I want to sell. So let's pretend I don't have any shares and I just go in and buy 100 shares of NEO right now. And I do that so that I can start selling calls. So then I can come over here and I'll go to the July 16th expiration date and I'll go over to sell and I'm going to sell a call. Now, the way most people do this when they sell a call is they go ahead and they sell a call that's out of the money. What does out of the money mean? So out of the money for calls is where the strike price of the option is higher than the current share price. So the current share price is 46. All of these options above it are out of the money. So people like to sell calls that are out of the money. And that makes sense, right? So for example, if I sell this call right here at the $47 strike, remember what that means. If on the expiration date at the end of the day, July 16th, NEO is above my strike price that I chose of 47, I have to sell my shares at that strike price. So I have to sell my shares at 47, which is fine because I bought my shares for 46 right now and I'd sell them for 47. So I'd make almost $1 profit per each share. And remember, additionally, for selling an option, you receive a premium. The premium on this would be $1.78 per share, and there's 100 shares here. So I'd get $178 for selling this out of the money call option. And let's take a look at what this visually looks like very quickly. So if I go to option strat and I go to covered call, I can go over to NEO, which is on NEO right now. Again, we're pretending we're buying 100 shares right now, and we want to sell a call right away. So our expiration date, we chose July 16th. The call, we chose the 47 strike, which again is an out of the money call option. So now take a look at what this looks like. Our max loss, $4,423. Max profit, $277. Break even is $44.23. So on expiration, if NEO goes under $44.23, we start to lose money. Okay, this is what this looks like. Very easy to follow here. Nothing too special. And again, this is how most people sell calls, out of the money. Now, me, this last week, I actually went ahead and I sold some in the money call options. So let's talk about why you would want to sell in the money call options and how that saved me a lot of money this week. Okay, so first thing to note about NEO from last week to this week is that it's dropped a lot, right? If we take a look last week, when I sold this, which was on July 2nd, NEO was basically almost at $51 a share. Now it's at $46 a share. So it's dropped about $5 a share, which is a lot, right? It is a lot. And so it has dropped quite a bit. So just understand that about NEO. Now, I'll get into my real life example towards the end of the video, but let's just imagine again, you buy 100 shares of NEO right now because you want to start selling calls. But instead of going and selling an out of the money call option, let's sell an in the money call option. And we'll take a look at how that changes things. So let's say we want to sell this call right here, which is at the this is at the $43 strike. So this is in the money. Remember, in the money for calls is where the strike price is less than the current share price. So all these options are in the money. So instead of selling an out of the money option like most people do, let's sell an in the money option. And let's do the $43 strike. Let's take a look at what that looks like. So let's go over here to a new window on the option strat. And let's take a look at what this looks like. So let's go to build. And let's go to cover to call again. And then again, we'll go to Neo here. And then again, we're pretending we're buying 100 shares right now. And we want to start selling calls right away. But again, instead of selling a call out of the money at the 47 strike, let's sell one at the 43 strike. Let's see what this does here. So now let's take a look here at what this changed. So now our max loss is $4,202, right? No, remember over here it was $4,423 by selling an out of the money call option. So our max loss just went down, quite a bit. Max profit $98, which actually went down quite a bit from $277, okay? The other thing though is look at our break even. Out of the money break even $44.23. Look over here, break even $42.02. So what are the benefits of selling an in the money call option? Number one, much greater downside protection, right? Because again, over here the most we can lose $4,202. Over here the most we can lose $4,423. So we have much greater downside protection in case the stock starts to drop. So generally speaking, if you are short-term bearish on the stock you're selling options on, you probably want to sell an in the money call option. Number two, there is a much larger potential profit range, right? And we can tell that by the break even. If we take a look here, break even is $44.23. Over here it's $42.02. So for example, if on expiration, Neo here ends up at, let's say, $42.50. Here I would lose $173. Over here, if it ends up at $42.50, what happens? $42.50, I actually make $48. So over here, I'm still making money at $42.50 by selling the in the money call option. Over here, I just lost almost $200 by selling this out of the money call option. And so as you can see, again, much greater downside protection by selling the in the money call option and much larger potential profit range. There's a bigger range for you to profit because over here, as long as it's above 42.02, you make money. Over here, you need to be above 44.23 to make money. And so ultimately, that's what happened this week with Neo, right? I felt that a pullback was needed with this stock, and I felt that it was going to come down. And so I sold an in the money call option. So the downside to selling an in the money call option is that your max profit is less than selling an out of the money call option. But in terms of limiting your losses, protecting your profits, it's a lot better at doing that. And so let me actually show you here now with the call options that I sold. If we go back to Neo, I have 200 shares of Neo. As you can see, my calls for this week were at the $46 strike, right? Which is basically where it's at right now. So for selling these two calls at the $46 strike, I received $800. And again, keep in mind, Neo has dropped about $5 a share since I sold this call, meaning that my stock, since I have 200 shares, I've lost about $1,000 on my stocks. But since I sold these two calls in the money, I received pretty big premium of $800. So I've only lost $200 this week. If I instead had sold a call that was out of the money for this week, which would have been at around maybe the $52 strike or so, I would have only received probably like $100 each contract. So I would have received about $200 for both contracts by selling an out of the money call option. And again, since the stock has dropped by $5 a share, my 200 shares are down $1,000 this week, I would have been down about $800 this week instead of only being down $200, right? So I basically just protected myself from losing an extra $600 this week by selling an in the money call option. And keep in mind, this is not NEO's not the only stock this happened to. This also happened to, for example, Palantir this week. Palantir is down quite a lot from last week, right? Palantir last week was, $25, over $25. What did I do? I sold in the money call options for this week, $24 strike, right? Which I already actually, sold for next week. You can actually see them down here where I bought to close them, $24 strike. So ultimately, this happened to a lot of stocks this week. They pulled back. I felt they were pulling back, and thus I sold in the money call options for them because, again, it gave me much greater downside protection. Therefore, I did not end up losing that much money this week. And ultimately, I can start selling some calls again for next week and, adjust where I want to choose my strikes for next week. So ultimately, you want to sell call options in the money if you believe there's a pullback imminent with a stock. Again, you're short-term bearish. Or also if you're just trying to strictly generate premium and not risk as much money, you don't really care about holding on to the stock. Because remember, again, there's a higher chance of you making a profit here since your profit range is going to be a lot greater. Again, ultimately in this example, as long as NEO is above 42.02, you would make some money. So again, if, just premium is primarily what you're concerned about, selling in the money call options would also be a great strategy. So anyways, guys, that's what I want to talk about here today. Again, very important to talk about limiting your risks, limiting your losses, protecting your profits. So if you have any questions, feel free to leave them in the comment section below. Check out the Discord, link to it in the description below. Hope you enjoyed the video. Let me know what you guys think, and I'll see you guys next time.